ready. So good morning, everyone. My name is Tom Tanner. I'm with the Small Business Development Center. On the call this morning, we also have from our office, Heather, who is there, and Cheryl, who is there also. Both of them, or one of them, will be answering anything in the chat box if you have questions. Since this is a recorder, I will not be taking questions through the presentation. At the end, if we still have time, I'll take some questions. Please read over this disclaimer so you don't hold me responsible for telling you something that the SBA changed their mind on, so which they probably will. All right, please keep your mic on mute, even though I think I made it so you couldn't take it off mute, but just in case you can, don't do it. Use the chat button at the bottom to ask questions. Again, they'll try to answer questions. If they can't, we'll do it at the end of the presentation. If not, I will send out all the answers to the chat questions when I send the slides out by email, which will probably be in the next day or two, or maybe Monday. The presentation is recorded, but it'll probably be first part of next week before we'll finally get it up and running. All right, so I want to start off with is talking about the key points for the part of the COVID relief bill. So this is the actual bill that was passed as HR 133. So additional funding of $284 billion of PPP funding. There's an additional program for shuttered venues. We're not going to be talking about that because it's a pretty long process, but this is for businesses that like theaters, museums, things like that. So if you fall within that category, you can always shoot me an email and I'll send you the documents that I have on that particular program. It is quite involved as to whether or not you qualify or not. There's been an increase in allowance for PPP funds for what we call NACIS Code 72, primarily, which is restaurants and accommodation places. We'll talk more about that. The employee retention credits are now available for PPP recipients, unless you're self-employed and don't have employees. It doesn't apply to you, but if you do have employees and you pay employees, that's a new credit. I have a class coming up at 2 o'clock today that you may have interest in if you think that applies to you. If you are involved in this payroll tax deferment, which a lot of people did not take advantage of or don't even know about it, but if you did, it has been extended to December 31st. Also, if you were involved in the credits for sick and family leave, that's also been extended. Actually, it's been extended to March 31st. I don't know why it says December 31st. I've had so many things going on here. I probably just missed that. 100% write-off. This is a new one. There's 100% write-off for business meals for 21 and 22 if it's provided by a restaurant and strictly used to meet with customers. Typically, business meals are written off at 50%. They're actually allowing you to write off 100%, but it is if you're meeting with customers, obviously it has to be documented. Another biggie is if you got an EIDL advance, it is not counted against your PPP forgiveness. Initially it was. So that's a big news, so that they're not going to subtract that from your forgiveness if you got an advance. We're going to cover these next things here in a second here. All right, so just a real quick summary of the act. So initially there was $349 billion put across in the initial CARES Act. Congress came back and gave a second installment of $310 billion. And the COVID Relief Act, which is what we're talking about today, has added $284 billion. So just to give you an idea, that's a total of $943 billion. And I just threw a number out to show you the significance of that. The entire 2019 US budget was $4.5 trillion. So you can see the amount of money that's going towards small business relief. It's a fairly hefty number. Now, the amount that was not used in the second installment was $130 billion. So there was people who did not take advantage of that, could have taken advantage of that, and who knows what's happened to that money. All right, so a couple things. All expenses initially, when it came out, it says expenses were not deductible if you used it to pay for with PP funds. That has been changed so that if you had expenses that you incurred as part of the PPP funds, in other words, if you got $10,000 for PPP and you used it to pay for payroll, that $10,000 is not included in income for federal tax purposes, but you can deduct it on your tax return. That's a pretty cool thing. So expenses are deductible, income is not included in federal tax base. Also, if you're an S corporation, you do get a basis increase with any income that you have, which is also a pretty cool thing. All right, so question, I received the first PPP, am I eligible for the second? So long as the money you receive from the first one is spent by the time you take the distribution to the second one, which I'm sure everybody who's probably already gotten a PPP loan has probably blown the money, so I don't think that's going to apply. And of course, you still have to qualify under the new requirements, but I'm just letting you know that is the only reason you would not qualify. So what are the new requirements? So one is the business has to be in business on February 15th, 2020. That has not changed. Businesses have no more than 300 employees. That has changed. It used to be 500 employees. This is by far the biggest change. The business must have had a 25% or greater loss in revenue during any quarter of 2020 compared to the same quarter in 2019. And we'll, again, cover that in more detail in a little bit. There's also a requirement to meet the necessity requirement, which is also under the initial program, but everybody kind of ignored it. And nonprofits, if it's a C3, a C19, or now that has been added as C6s. All right, so how is the 25% or greater revenue deduction determined? So basically what you're going to do is you're going to compare your quarter to quarter. So if you compare first quarter of 2019, and most likely nobody's going to apply for 2019 in the first quarter because this whole thing didn't start till March. So we're going to kind of ignore the first quarter. So let's take a look at second quarter. So if you look at second quarter sales of 2019 and then compare it to second quarter in 2020, did you have a 25% less in sales? If you did, you qualify for the program. If second quarter didn't, you can check third quarter. If third quarter didn't, then you can check fourth quarter. All you do is you just have to have one quarter to be able to qualify for the program that has had a 25% or greater reduction in revenue. So what is this necessity requirement? This is something, again, that was in the initial form that you initialed, and you probably just don't even realize you initialed it, but there was a button that said, current economic uncertainty makes this loan request necessary to support the ongoing operations of the applicant. The only reason I put this in here is because the SBA has specifically stated that don't forget about this necessity requirement. But they do not define what necessary is, so that's kind of left up to each individual. Certainly the case if you're a small business and you've got, $100,000 sitting in your bank account, you're probably going to be hard to say that it's necessary to support your business operation, unless that's only like 15 days of operation. I will say the SBA stated it will not question the necessity certification for loans under 2 million. So if you got less than 2 million, they're not even going to worry about the necessity certification. And since the total amount you can get now is 2 million, it's basically they're not going to even look at that. I will, if you're not aware of it, all PPP loans are produced and made public so that anybody can see what companies got PPP loans and the amount they receive. So if you have any issues with that, you just want to make sure you know that it is a public document. All right, so what's the deadline to apply? Right now it's March 31st, 2021. Who knows if that will change, but let's just say for now it is. Of course, who knows when the funds are going to run out. They went through the first batch pretty quick. Will they come out with a second batch? It's totally unknown what's going to do, especially with a new Congress coming in. They may decide that it's great, they're going to throw more money at it. They may decide they'd rather do other programs, so I don't know. What I would do is try to get your, if this is a program you're interested in, you want to make sure you apply sooner more than later. So where do you apply for this program? So first of all, there's no requirement to apply at the same location you did for the original PPP. So if you applied at a particular location, you don't have to go back for that for the second one. We do not know who's going to participate as a lender for this program, primarily because it's still, the SBA has still not released all the information on it, and the banks haven't, or the lenders have not decided as to whether or not it makes sense for them to participate. If you did want to check, the best thing to do is check with your initial lender if you want to use it and had a good experience with, just to see if they're going to participate. If not, then that's a time to be looking for alternatives. There will also be multiple alternative online lenders or portals that will be available to you. I still suggest local banks are going to provide a more personal service, so I would probably try to go with those if you can, but if you can't, the online portals do exist. So, whoops. How is the amount of PPP loan determined? It hasn't changed much from the previous time period. We're going to go over a few little things. So you have the option of using your payroll amounts from 2019 or the 12 months prior to the application of PPP or 2020. Because of the 25% reduction, I can't imagine anybody not using the 2019 numbers, because it's probably going to be a much higher number. Just remember, sole proprietors and partnerships are treated a little different. We'll talk about that in a little bit. So it's just like before, you're going to add up your payroll costs, which we'll cover on the next slide, about what's the payroll cost. And of course, any employee that has a payroll cost more than 100,000, you're going to reduce it to 100,000. Okay, so if you're an employee that's annualized, and this is annualized at 100 plus over $100,000, and that includes all payroll costs, which we'll talk about, you're going to reduce it to 100,000. You do the same formula, you divide it by 12 to get the monthly average, and then you multiply it by 2.5. If you're one of the NICS code 72, which we talked about, restaurants and other things, we'll talk about that in a minute, you get a bonus for being in that particular field. So what's included in payroll costs? So from your 941 forms, you're going to take line 5C, column 1, which is your Medicare and Social Security wages, okay, for all 4 quarters that you're counting. You're also going to look at health insurance premiums, any FSA, HSA, it's not HAS, it's HSA, blew that one. Disability, dental or vision insurance, retirement contributions, payments for state unemployment insurance, and it's also any employee pre-tax contributions. Okay, so if they have pre-tax contribution, because that's not going to show up on line 5C of your 941, you can also add that in. What is not included is employees located outside the US. So if you have employees that located outside the US, you cannot count their wages. Compensation of any employee over $100,000, we've already talked about that. Employer or employees' FICA taxes, you have to back those out of the equation. And if you paid and got a tax credit or plan on applying for a tax credit for the qualified sick and family leave wages, you cannot count those. Or for the employee retention credit, you cannot count any of those towards the same numbers. All right, so this is the 941. I'm sure you're familiar with, if you pay employees, I'm sure you're familiar with this. I got this little box that says taxable Medicare wages and tips, and that's the number you're looking for as your wages, and then you have to add the other things into it. All right, so this is the cool thing. So if you are in code 72, which includes all accommodations and food services. So this is going to be hotels, motels, bed and breakfasts, RV park, recreation camps, boarding houses, caterers, mobile food services, restaurants, snack bars. You get to use a 3.5 multiplier, not a 2.5 multiplier. So that's a pretty big deal. So just make sure when you fill out the application, you are familiar that you are now able to do that. So how do I apply for this crazy thing? So whatever lender you're going to, or portal or whatever, they're going to require you to fill out a form. And if it's an online portal, they're going to have their own application process. If it's a local bank or something else, you're going to be using the SBA form. And this is the SBA form 2483-SD, which as of 5 minutes before the class does not exist yet. So we're not sure when that's going to be available, but that's the form that's going to be required. You're going to need to provide the 4 quarters of your 941, or if you're using an outside payroll service, your payroll processor records for the period that you're using for your basis. So this is going to be 2019, which is probably going to be the case for most of you. If you use 2020, you're going to use that, or prior 12 months if you want to use that. You want to have your state unemployment reports for the same period. This is your VEC forms that you send in for your unemployment payments. You need to provide proof that you are paying employees on February 15th. In other words, somewhere to show your payroll that you had a payroll on February 15th. So you had actively running an operation and paying people on February 15th. That's a key date. And this is the new requirement. You need to provide proof that your business has sustained at least a 25% decrease in revenue for any quarter, okay? You need to provide that. Now, if you are a small loan, and I think the number is going to be $150,000 and less, you do not need to provide that when you apply, but you have to provide it when you apply for forgiveness. So you might as well just go ahead and put it together and have it together to submit when you actually submit for your application. So you have to show, and this is through bank records or through profit and loss statements. Again, they haven't made particular instances of what you need to, documents you need to require, but that is basically what you're going to have to do. All right, so this is a list of the 2483, which is similar to what you sent out when you applied the first time. Again, this is not the form, because the form you need to fill out is not in existence yet, but just to kind of give you an idea, it shows your formulas and things like that. All right, so let's do some examples of how this works. So we're going to do a simple example first. You don't have any employees that make more than $100,000. So your annual payroll is $120,000. So you basically figure, what's my average monthly payroll? It's $10,000, which is 120,000 divided by 12. So I got $10,000. My multiple is 2.5. So basically it equals $25,000. So my maximum loan amount is $25,000. Pretty straightforward. All right, so let's take another example. If you do have employees that make more than $100,000, so let's just say annual payroll was 1.5 million. You're going to subtract the compensation amounts in excess of an annual salary of 100,000. In this case here, they figured out it was $300,000 in excess. So their net was actually only 1.2 million. Again, you take the average monthly qualifying payroll equals 100,000, which is divided by 12, multiplied by 2.5, you get 250,000. Pretty simple process. Again, this hasn't changed much since day one. The last one is basically the same thing. The only difference is this is NICS code 72. and your average payroll is 10, but instead of using a 2.5 multiple, you could use a 3.5 multiple. So your maximum loan is actually 35,000, not 25,000. Pretty cool. All right, so for sole proprietors or independent contractors or self-employed, whatever you're going to call it. So what you can do is use either your 2019 or your 2020 1040 Schedule C. It makes no sense to use your 2020 Schedule C. So you're most likely going to use your 2019 Schedule C, which you should have already filed by now. So you basically look at line 31, which is your net profit. If this value is over $100,000, then you use $100,000. You take that line 31, divide it by 12, and multiply it by 2.5, and that's your PPP amount. Okay, pretty straightforward. The only exception being is if you fall within the 72, the NICS code 72, then you would multiply it by 3.5 to get your PPP amount. Now, if you're a sole proprietor and you have employees, which you can, which some of you probably do, you can still use the same formula as the others, which we just covered, and you would add to that your amount to get the total amount of the PPP loan. So if you're a sole proprietor independent contractor, you're going to have to provide the Schedule C that you use to figure the amount listed above. You're going to have to provide a bank statement that shows you were in business on February 15th. And if you have employees, you're going to provide the same documentation as everyone else did for their particular employee. That's the 941s, the VEC forms, etc. I'm not going to cover this, but it's in the documentation that's going to be sent out. If you are a farmer, there are some major changes for the farm side of the equation, which are kind of beneficial to you. So if you're a farmer, they'll be in the packet, and you can certainly contact me if you have questions, because some of it's a little bit more complicated than others, but it's also pretty cool. All right, so if you operate a partnership, and this would mean you could be an LLC taxed as a partnership, which I know some of you probably are. The partnership itself must submit the application, not partners. So the partners themselves cannot submit an application, only the partnership. So the big thing is the way it's determined, it's the net earnings from self-employment of the general partners. And again, this is the self-employment. So what you would need to use is your 2019 or your 2020 IRS Form 1065, your K-1s, and you would look at line 14, which is your self-employment income. If it's on line number 1, which a lot of partnerships accidentally put it in line 1, not line 14, then it won't count if it's in line 1. But if it's in line 14, that's the number that you would use. And again, this is per partner. If you have any Section 179 claim deductions, and this is special deductions for depreciation, you would look at line 12, that would come off of it. Any unreimbursed expenses claim would come off of it also. So whatever that number is per partner, you would multiply it by 0.9235. And this is basically to take away from the Social Security numbers that you would typically multiply by in order to get your self-employment. So you're going to take all those partners' numbers, and if it's over $100,000, then you're going to reduce it to $100,000. If it's less than $100,000, you're going to use those numbers. You take all of those, total it up, divide by 12, and multiply by 2.5 again to get you the same amount of what your loan is. Again, if you're in a business that is 72, then you get to multiply it by 3.5. If you have employees, you're going to use the same thing as other businesses too and add it to these numbers here. So if you have employees, you're going to figure out that number and then add the partners' numbers on top of that. For partners, what you're going to submit, you're going to have to submit your 1065s with all the K1s so that you can see every single partner's K1 showing line 14. You're going to have to show bank statements, show you're in business on February 15th. And also if you have employees, you got to do the same thing that you would do for everybody else, regards to 941s, EEC forms, etc. All right, special rules for S corporation, because I'm sure some of you out there are S corporations. The biggest thing you've got to make sure is only S corps with payroll qualify for PPP. If the owners only took distributions, you're not going to qualify for this program because it's based on payroll. So if the owners filed 941s and took salary and paid Social Security, Medicare, et cetera, you able to qualify for that, but it's not going to count for distributions. So you may run payroll and distributions. It's only going to count on the payroll that you did, not distributions. Does not count. If you have owners that are less than 2%, then health insurance expenses can be counted towards your payroll expenses. For owners that are more than 2%, then health insurance expenses cannot be counted towards payroll expenses. And that's just part of tax rules of how 2% fringe benefits for 2% owners are worked. Company retirement contributions can be counted for expenses for all owners, even though if you have more than 2%, there are some additional restrictions. That's one of those where you probably want to check with your tax preparer to talk in more detail. So what if you're a seasonal employer? At least you think you're a seasonal employer. So first of all, you have to figure out whether or not you're a seasonal employer. First thing, they define it as a business that does not operate more than 7 months in a calendar year. So if you only operate 6 months out of the year, you're considered a seasonal employer. Or during the preceding calendar year, had gross receipts for any 6 months of that year that were not more than 33% of the gross receipts for the other 6 months, then you qualify as a seasonal employer. If so, you get the fun of determining any 12-week period between February 15, 2019 and ending February 15 as your baseline period. So you get to pick the 12-week period that you want. So obviously you would look back and figure out when I had the most payroll during that period. And you can't pick 1 week here and 1 week there, 1 week there, 1 week. It has to be straight 12-week period. All right, so what can I spend my PPP funds on? So this is new. Some of this stuff is new and pretty cool. As before, 60% must have been spent on payroll. And of course, that was as of the second determination that initially was started off at 75% and it dropped to 60. The 60% is still there, can be spent on payroll expenses. So the other 40% can be spent on any of the following categories. And boy, this thing is really expanded to make it really simple to be able to spend that money. The rent. So of course they say the lease has to be signed prior to February 15, 2020. We're making the assumption, of course, I know what happens when you make an assumption, but I'm making the assumption that if you signed a new lease in the same location or you're still in business and you move to a new location to sign a lease, that would still apply to this. What they're saying is if you signed a lease for a new business and it was after February 15th, it would not. I'm not going to put that in stone, but that's the assumption I'm making. Payment of interest on any mortgage or loans that were incurred prior to February 15th, 2020, that's going to be standard, I guarantee you that. Utilities, that's all utilities. So the new things are these worker protection products or leasehold improvements for protection of workers. And I pulled across 3 different slides to show you the actual verbiage. I'm not going to read the verbiage, but basically it means things like, sneeze guards or things like that you did, or maybe you established a drive-up window for your business, then those are kind of things that you can actually use as that 40%. You can also count it towards software or cloud services that improve your business operation. This could be adding Zoom, adding QuickBooks Online, things like that are software cloud services that improve your business operation. Maybe it's an online app for people to order food online or something. So that's a pretty neat. And the last one is this covered supplier cost. That's anything is necessary for operation of your business, which is pretty wide open type thing, and I'll let you read over when I send it out to you. I'm not going to make you read it right now. So first of all, the covered operations expenses. So this is the software things that we're talking about. So this is keeping track of supplies, inventory, records, expenses. Then you also have the covered protection expenditures. Again, you'll get a copy of this so that you can read it, but I'll tell you exactly what would be covered under that. And the third one is covered supplier cost. You know what it basically says: expenditures made for a bar to a supplier of goods for the supply of goods that are essential to the operation of the bar at the time in which the expenditure made is made pursuant to a contract order or purchase order, and in effect at any time before the covered period with respect to the applicable covered period. So this almost sounds like anything like cost of goods that are associated with your business, okay? And it could even expand past that. So my point is that spending that extra 40% is probably not going to be an issue. So as before, some people had an issue with trying to figure out how do you spend that money. All right, so how long do I have to spend the PPP fund? So as you're probably aware, it started off initially as an 8-week program and then went to a 24-week program. Same thing applies, is that you can select an 8 or 24-week period. I'm not understanding why they do that. Is that because at any time you can select any date between 8 and 24 week as the ending date. So if you take the money and you spend it after 10 weeks, it has to be at least 8 weeks. But if you spend it in 10 weeks, then you can stop at that time, submit your application, say the program is done. You don't have to wait for 24 weeks. So I'm not sure why you say you can need to pick 8 weeks or 24 weeks. But anyway, those are options. The key is the date selection is still important. Is still there's workforce reduction penalties. I don't know if y'all remember those things, but you have to have a certain amount of employees hired or employed and paid during that time period. We'll cover that in a second. So how much of the loan can be forgiven? Well, you can get forgiven up to 100%, providing the funds are used as listed in the previous slides, okay? The other case is the employee wages are not reduced by more than 25%. I don't know of anybody who did this, because what they mean by reduced wages is that you actually lowered their wages, their hourly wage to, in other words, you were paying them $10 an hour and you moved them to $7.50. Okay, I don't know if anybody did that. So typically that did not apply to anybody. But what did apply, that the number of employees are not reduced between February 15th, 2020 and during the covered period unless a safe harbor is selected. This is an area I have no idea, because they have not given any more guidance as to how that's going to apply to now, whether or not they're still going to look back to February 15th, 2020, or whether or not they're going to pick another date, since that was a long time ago. Is if you have to get back up to that particular number of employees as of that date, or whether they're going to pick something else, I don't know. But the way it stands now, you have to be, you would only be reduced, I mean, you would have to reduce a loan if February 15th, you had a certain number of employees, you have less now. Of course, the application has to be filed within 10 months from the end of the covered period, which we'll talk about more in a minute. So the case would be, as I talked about during, unless you have a safe harbor, if you may remember, if you filed for this initially, there were safe harbors that basically said, well, I made an offer to rehire individuals and they refused to do it. So that's one of the safe harbor rules. Again, I'm not going to go and read every single one of these. These will be in the packets that's sent out. Just remember, there's safe harbors to say, well, I couldn't get back to the number I was at because of some of these reasons. If these reasons apply, then you don't have to worry about getting back to the initial number of employees. Even at this point, we're not sure what the initial number of employee date is, but I assume these safe harbors are still going to be out there. So I just put it back out there to let you know. And the same thing with this one too, okay? So how does the forgiveness process work? You must submit for forgiveness to your lender within 10 months after the end of your covered period. If not, you will have to start paying principal and interest on the entire amount. So if you are selecting a 24-week period, after the 24-week period, you have 10 months to send in your forgiveness application. Once you send that in, the bank has 60 days to send it to the SBA. And the SBA has another 90 days to provide the answer. If you have a loan and it turns into a loan, either because you didn't submit a forgiveness application or because the SBA did not forgive it all, the loan term is 5 years at 1% of this unforgiven amount. Now, right now, you have options, multiple forms for options, and I should have asked which forms people used in my survey, but I didn't. But if you have loans of less than $50,000, you would use this 3508S, the simplified application, which is pretty simple to fill out and it doesn't require necessarily a lot of documentation. If you have a much more detailed application and it's more than $50,000, you would need to either use the 3508EZ or the 3508. Both of these forms have particular reasons you would use it or not use it. As part of the packet, as part of the COVID relief bill, the SBA is supposed to be releasing a new form for loans less than $150,000 that's called the simplified form, which is supposed to just be a couple of check boxes that are sent in. No idea when this is going to be available. It's supposed to be available in the next couple of weeks. Who knows, it will be. I don't know how simple it would be. I don't know if it's going to be easier than the 3508S or about the same, but it's going to go up to 150,000, et cetera. Anyway, you have multiple options to do that. If you purchased a business, I'm not going to cover this again. It's going to be in the packet so that you can look it over. But if you purchase a business, this gives you kind of a guidelines of how you can use the program or not. And the last slide is talking about the employee retention credits. If you're interested, I have a class at 2 o'clock today. Still able to sign up for it. Again, this is not available for sole proprietors unless you have employees. But I do want to mention that if you are thinking about taking employee retention credits or will take employee retention credits in the future, you need to make sure that you're not using the same PP funds to pay the same wages that you're being claimed for the ERC. So in 2020, that may not be too difficult, but in 2021, if you're getting a PPP loan and it's covering a 24-week period and you apply for an ERC, you've got to be really careful that you're not double dipping because that's illegal. So anyway, if you want to learn more about the employee retention credits, you have to go to the class at 2 o'clock today. So I covered a lot of information. We still have a bunch of time. We got 20 minutes to answer questions, which I may or may not have the answers to. And I do want to first stop the recording so that we don't deal with that.